Study after study has shown that women are less aggressive than men when it comes to investing, but are more likely to save money compared to men. In fact, one study by BlackRock found that almost half of women highlighted saving money as a priority. Well, Claire Finn is Head of Strategic Partnerships and DC Investments at BlackRock and joins us now. Thanks so much for joining us. It really is an interesting one, and there's been so many studies done now on the differences between women and men in investing. What for you is the key highlight that we're seeing here at the moment?
So the main difference we seem to see between men and women is one of confidence. So women tend to feel less comfortable making investment decisions than men. Only 38% of women felt comfortable making those decisions versus 53% of men. So as you say, they take financial planning seriously, but investing itself seems to be something that they are challenged with.
When you say confidence, is it because a lack of understanding, you feel? Is it because it seems to be a very male-orientated industry?
I think there's a number of things in there. So confidence is one thing. Also, I think women were very tuned into the economic environment and the risks that are there at the moment. And also things like changes going on in pensions legislation. So they're very much engaged and watching what's happening. But when it comes to individual investment decisions and making those decisions themselves, they tend to feel less confident. And I think that's something you see in women more generally. We systematically underestimate our own abilities in terms of making decisions and in terms of careers and investing.
The risk aspect is a really interesting one for me because we are less risk averse, but in the long term, if you look at women investors and high profile women investors and hedge fund managers, actually they're quite often more successful.
Yeah, so risk aversion is also something that came through in our survey. When we asked people in the survey if they would be willing to take on more risk in return for better returns, only 14% of women said yes. But when we showed them a picture of what investing could do for them, the answers went up significantly. So we showed them a chart which is the returns that you could get from a 10-year investment in the FTSE All-Share versus cash. When we gave women that picture to look at, and they could see obviously the risk that's involved in investing in equities, nearly 2/3 of them said that they would want to have some kind of equity exposure.
So sometimes it's about explanation. So it goes back to that thing I said about understanding.
Yeah, exactly. I think investment education is really important. And also the other big trend that came out in the survey was women felt twice as confident in investing and in making investment decisions when they took some kind of advice. Now that advice doesn't need to be from a financial advisor, it could be from friends or family and various different sources, websites, etc. But some kind of advice was really valuable.
What about other trends in terms of sort of diversified portfolios, where exactly they're putting their money?
So when we looked at how people are actually invested through the results of our survey, we found that women held around 73% of their investments in cash, and actually a very small amount was invested in things like alternatives and even equities. So only 8% in equities, 5% in property investments, for example. And while women were holding 73% of cash, on the whole they recognise that that's far too high, and the ideal amount is said to be around 40%. So I think helping women to take those steps to get those investments in place is really important for us.
I was going to say, what needs to be done to equal things out a little bit more, do you feel?
Yeah, so I think, one, taking advice or looking for advice is obviously an easy step that many people can take. The second thing I would say is there are lots of different ways for you to invest and for you to invest in a tax-efficient manner. So make sure you make the most of all of your tax advantages, such as ISAs and pensions. And if you have a workplace pension, there's a really big benefit to that in that there's an investment committee or a board of trustees who are going to make investment choices for you. So if you don't know what to do, that's a great way to put your money to work and to invest for the long term. And then lastly, there are plenty of places where you can look for things like model portfolios and investments where people put together a whole selection for you that you don't have to make choices around individual component parts. And if you're looking to start out in investing, then think about index investing as one way to do that, where you don't have to go and choose active managers, for example.
Okay, some great advice there. Thanks very much. I have to leave it there, but Claire Finn, thank you from BlackRock.
Thank you.